Good morning, traders. Richard here doing a quick Ichimoku Cloud Chart market review of the Magnificent 7 tech stocks. We've got Google, Amazon, Apple, NDVA, Microsoft, Meta, and Tesla, which make up the Magnificent 7 stocks. And we're going to look at these stocks from an Ichimoku Cloud Chart market perspective. We'll kick off with Google. Now, Google had a fantastic rebound from a cluster of a cloud chart support zone. If you look at these cloud chart levels, we call them the cloud chart shadows, which are old support zones on the way up, can come back to form new support zones. So we had a fantastic rebound there between this range between 124 and 121. Google did manage to find a support there. It was the end of October. We were looking for a year-end rally, November seasonal rally, and then that ensued. Google performed well, broke through the bottom end of the cloud, only to run into resistance at the top end of the cloud, retested that zone, rebounded from the standard line of the Ichimoku cloud, broke past the top end of the cloud, and we're back in bullish territory. Price action above the cloud is bullish, price action below the cloud is bearish. Now, key levels to watch out for is this cloud chart support zone. So that should be a support zone for the next couple of weeks. And if the market's a little bit weak, Google's a little bit weak, then we could come back to retest this zone here and then continue the rally from there. But Google is back above the top end of the cloud. That's bullish, with old resistance levels there as the upside resistance targets in the current rally. 142 is the upside targets, with support for swing trades 134 for a potential swing trade back up for a year-end rally into 142 retest. But so far so good. Google looking good. Prices back above the top in the cloud. We had a very strong rally in November. Now consolidating with support. Look for a potential for support test at 134. Amazon has next managed to rebound from the front-end cloud chart support zone. You can see there that zone between 124 and this significant support zone of 120. Amazon did manage to rebound from that on the weekly. Let's take a look at the daily. Let's just see that. Yeah, daily bottom end cloud chart support zone. The old cloud chart support level came into play. Nice strong rally, broke through the standard line of the cloud there, resistance. Then met the upside target, the bottom end of the cloud, broke through that cloud chart resistance zone, back in bullish territory, with the top end of the cloud here as a new support zone. Keep that in mind. That is a new support zone there, as well as the front end of the cloud. These are new support zones, significant support zones. 139 managed to break past the top end old resistance zone there, and now consolidating, slightly sideways moving grind there. The standard line of the cloud there, turning line of the cloud there, is a swing trade opportunity, but ideally we'd like to see this standard line to catch up and then test the 139 there. So any kind of weakness consolidation could see a dip back to 142 and 139, but so far so good. Trying to break past or stay above that significant resistance zone there. That zone should come back and to be retested for support. But so far strong rally, very strong rally. November seasonal strong rally in Amazon as well, based on the Ichimoku cloud. Keep in mind that this old cloud chart resistance zone is still active on the weekly chart of Ichimoku chart of Amazon. So if we get a sustained breakout past that resistance zone, then the next upside target would be this top end cloud chart resistance zone. So the upside target is 161 on Amazon. If we manage to have a sustained breakout past this old cloud chart resistance level of 145, so that's the upside target. And then support here is the zone between 134 and 139 is a critical support zone on the weekly Ichimoku. Next up, just looking at Apple's weekly chart after slicing through the bottom of the cloud, entering bear market territory. Apple stayed below the cloud for quite a couple of months and then managed to rebound from this low here in January, which is the same support zone as the September 2021 support zone for the entire quarter there. So far so good. Managed to rebound from that zone, broke past the top end cloud chart resistance here, and then entered a whole new bullish phase. Price action above the cloud is bullish. Where we now Front end of the cloud is a support zone to be tested. 179, 180 is the front end cloud chart support zone for Apple, as well as the standard line there. That level there, just above 180, there's a key support zone. So potential for any kind of pullback to swing trade back, a rebound from those levels on the weekly Ichimoku cloud. Turning to the daily Ichimoku, let's take a look there. You can see how this quarterly trade rebounded from this old cloud chart support zone, between that support zone there and this cluster of support in the standard line there back then. Support zone on the cloud chart level between 170 and 167. And Apple then rebounded from that zone. Then grinded, managed to break past the bottom end cloud chart resistance. Then the target was the top end cloud, managed to break past the top end cloud chart resistance, and then had this zone to deal with. You can see their brief breakout there of this old cloud chart resistance zone, as well as a front cloud resistance zone. This 185 is now a new support zone, and the upside resistance target there came at the top end of the cloud. You can see how Apple reversed lower after hitting that zone. So now we expect some form of a consolidation of this move. It can pull back to this zone here at 185, and hopefully by that time the standard line's caught up, and you have two support zones to keep eye on: 185, the front end of the cloud, and then the standard line consolidating up to that zone. But a very strong rally after rebounding from critical cloud chart support zone. Apple's now back and above the top end of the cloud on the daily, and that's bullish for the next coming quarter. Next up is Meta, king of the social sewer, top end social media stock. The old Facebook. Yeah, the top end of the cloud chart is the next resistance zone to watch out for. We had a very strong rally after rebounding from the fourth quarter in 2022 from a major cloud chart support zone. Managed to break past the bottom end cloud chart support level. So it various buy signals. This rebound buy signal, the cloud chart cross buy signal, the other cloud chart cross buy signal. So we had about 4 buy signals on the way out, and that's on the weekly chart alone. Now it's fighting this resistance zone. It managed to get past that resistance zone. You can see that test there, broke past that test at the 1314 resistance zone. That can come back as a key support zone for this rally, as well as the front end of the cloud there. But watch out, we're very close to the old cloud chart resistance. So far so good. Expect a pullback to the standard line and the turning line, and then a further year-end rally back into the 349 zone, and then ultimately trying to take out the old high there of 385. So far so good. Very nice swing trade, position trade basically on the weekly, but on the daily we can see a beautiful rebound there from old cloud chart support levels there. This quarter we had a nice, so you can see the candlestick lengths there, major support zone came back into play, as well as the old front end cloud chart support zone there. Broke past the bottom end cloud chart resistance zone, and see how the candlestick indicates support there. Cloud cross buy signal there, nice strong rally, and it's very close to the resistance zone there at 349. Front end of the cloud here is the support zone, so critical there. 322 is the front end cloud chart support zone, as well as this old high, these old highs there. 328 is a new support zone to be tested. Hopefully by that time the standard line caught up with the front end cloud chart support zone, so any kind of consolidation back down, yeah, could see another swing trade for a further year-end rally to try and take out the 349 upside resistance target. But so far so good. King of the social sewer, making lots of money from social media sewage basically. Next up is Microsoft, the company that basically lets its customers sort out its software problems. Yeah, we can see a beautiful cloud chart support rebound from this major support zone of between July and August. A beautiful rebound there, multiple support there, broke through the bottom in the cloud. Let me just enlarge that picture there. Broke through the bottom in the cloud. The bottom of the cloud became support. Note the confluence of the bottom end cloud chart support zone as well as the standard line. Gives extra swing trade opportunities. Back up, broke past the top end cloud chart resistance zone. That top end cloud chart was a major resistance zone, and then off it went. So far so good. A little bit extended from the top end of the cloud now. We look at the price action between the price action and the top end of the cloud here. So can see a bit of a consolidation in the new year, maybe back down to retest the front end of the cloud there at 360, and by that time the standard line would have caught up. But so far, very strong performance in Microsoft, a little bit extended now on the daily Ichimoku cloud, with downside consolidation risk to the front end cloud, but so far so good. Nice strong stock, and any kind of secondary position here would be on any kind of pullback to either the turning line of the cloud there for a shorter term swing trade, or for the multi-month swing trade, look at the support test for the standard line there when we pull back in a consolidation of the next couple of weeks. But so next up in NDVA, beautiful rebound from this cloud chart support zone, this whole cluster of cloud chart support levels from the second quarter of 2021 and the third quarter of 2021, and then NVIDIA managed to rebound in the fourth quarter of 2022. Let me just enlarge that. Then the upside resistance target was the bottom of the cloud, we met that, and then the upside resistance target then was the top end of the cloud, we met that, broke through that, and then entered bullish territory back above the top end of the cloud, is bullish, and then the rally just ensued, a little bit extended from the top end of the cloud. Now quite volatile on a weekly basis here. I do expect some form of a consolidation. The front end of the cloud is a new support zone to watch out for, 417, as well as the turning line, standard line of the cloud there. That's another support zone for potential swing trades, 439 and 417. These are beautiful secondary entry points in the current rally, but it needs to consolidate a bit, become very extended from the top end of the cloud. If we now look at the daily Ichimoku, let me just zoom in there. You can see a beautiful rebound from very close to the cloud chart supports level there. We just put a line in there. It was kind of support here, was pinched between the old top end cloud chart level there and this bottom end cloud chart 389. Managed to get a rebound there. Strong performance. The upside target was the resistance at the top end of the cloud, broke through that. NVIDIA entered bullish territory. Price action above the cloud is bullish. That was a third to buy signal there, and now a little bit extended from the top end of the cloud. So we do see some form of a consolidation with back down to the front end of the cloud there. Look for support for a swing trade from 470 upwards. This old high here would be tested for support, and then support for this coming quarter, and the next one is the line in the sand is 452. As long as NVIDIA stays above this top end cloud chart support zone, we're still in a bullish trend on the daily, with swing trade opportunities for pullbacks to either the front end of the cloud, the standard line of the cloud when that catches up there. But 470 seems to be a nice swing trade entry point read from the top end Ichimoku cloud. It's been a good year for Tesla, a little bit of a consolidation taking place after rebounding from this major cluster of support. Ran into resistance at the standard line of the cloud. Managed to rebound from the front end standard line of the cloud, broke through the bottom end cloud chart resistance, broke through the top end cloud chart resistance, and then found support at the new cloud chart support zone. You can see how the top end of the cloud there is a major support zone. So as long as Tesla stays above this support zone, we should continue with this rally. But the line in the sand for the outlook to change to bearish is if Tesla trades below the bottom end of the cloud. So that's the line in the sand where all bets are off, as they say, so to speak. But so far so good. Nice little swing trade here from cloud chart support levels, and then upside resistance targets are these old highs here, as well as the top end of the cloud. That's now all off the weekly Ichimoku cloud. Now if we look at the daily, you can see nice support swing trade there. Found support at old cloud chart level, managed to rebound from the turning line of the cloud, broke through the standard line resistance there, and then ran into trouble at the top bottom end of the cloud there for resistance, pulled back and consolidate for that move, and then made another attempt to break past that. So now on the daily, we're back in bullish territory, with this front end cloud as a key support zone. So key levels to watch out for potential swing trade would be this front end cloud support level there, as well as the bottom end of the cloud there. So it can go as low as this zone there. So these are the support zones, 220 and then 236, with resistance levels, significant resistance at this zone there. This old cloud chart resistance zone is 256, and then this old cloud chart resistance zone. So these are the upside resistance targets, 273, 256 to test with support swing trade, support levels 236 and then 220. So we could see it run into trouble there, come back, test the cloud chart support zone there, and then rebound into the year to test the 273 and ultimately the old high there of roughly the zone between 292 and 300. So that's Tesla in a nutshell. So far so good, back above the top in the cloud. As long as it stays above this top end cloud chart support zone, we're still bullish on the daily Ichimoku. So it's been an absolute fantastic quarter. Swing trading, the Magnificent 7 stocks. Tesla performed well. Amazon, a nice rebound there. Apple, all fantastic swing trade, both driven by seasonality, a year-end rally, as well as significant rebound from major support zones from an Ichimoku cloud chart perspective. Until next time, happy cloud chart trading. Bye for now.